You can realize a massive tax loss today while keeping upside market exposure using the stock replacement strategy, but only if you dodge the 30-day IRS trap. The goal of tax loss harvesting is to sell a losing stock to offset your capital gains, lowering your tax bill. However, most traders fear selling because they might miss a sudden market rebound. The IRS Wash Sale rule is your biggest obstacle here. It states that if you sell a security at a loss and buy a substantially identical security within 30 days before or after, the tax deduction is disallowed. Crucially, the IRS often views deep-in-the-money call options on the same stock as substantially identical. To maintain exposure during the 30-day waiting period, you must pivot to a correlated asset, like a sector ETF. Once the 31-day window clears, you can re-enter your original position using a leaps call option. By targeting a delta of 0.80 or higher, you mimic the price movement of stock ownership with much less capital. This strategy allows you to book the tax loss now, maintain temporary correlation through an ETF, and eventually return to a leveraged position on your high-conviction stock. Consult a tax pro, verify your deltas, and harvest wisely.